When the major supply shock occurs, 99% of consumers have no idea what will happen in the air. Charts, price changes, and SEC news are currently the main topics of attention. However, the real story, the one that could fundamentally alter the cryptocurrency landscape, is happening in the background. The usable quantity of XRP is steadily declining, not a conjecture or a rumor. This is the reality. Each and every transaction and block is an element of what is happening right now. You won't be misled by these statistics, which paint a very unsettling picture. If you look closely at how much XRP is now in circulation, it could seem like there are billions of coins in circulation. In fact, it is more than 50 billion XRP, making it one of the most significant amounts in the entire cryptocurrency environment. This can be a staggering and challenging figure for new investors who are just starting their education about the market. However, such statistic is not really deceptive, and it's simple to get the wrong idea if you don't investigate it further. Actually, the vast majority of those tokens are now kept in Ripple managed trust accounts. They are never available to ordinary people or those who trade on the open market. Approximately 1 billion XRP are released by Ripple every month, however, because they are given to big partners. A sizable quantity of this money is never even brought to open markets where ordinary investors can buy or sell it. Strategic business partnerships and confidential over the counter transactions. A sizable portion of the tokens never make it into the hands of typical traders. On-demand liquidity corridors also make use of a sizable portion of these tokens. These corridors are completely unrelated to the blockchain and have no effect on the listed on exchanges. Consequently, a large portion of XRP has already been claimed, held, or limited, even though the data may show that there is a sizable amount of XRP in circulation. However, this suggests that the average investor has much less access to XRP than you might think. After considering the locked escrow, institutional holdings, liquidity provider reserves, and long-term retail cold storage, I watched wallets, looked at on-chain data, and examined exchange balances for several months before realizing that the truly liquid amount of XRP that can be bought on the open market has dropped to less than 3 million coins. This is the inference that can be made. This 3 million is error-free. To put it another way, that is far from enough for a medium-sized hedge fund to build a substantial stake without sending the price into overdrive. Now, consider this on cryptocurrency exchanges like Kraken, Bitstamp, Binance. In the past, there were billions of XRP in use. On the other hand, the amount of XRP traded on exchanges has dropped by over 70%. The little liquidity that has remained after the SEC case is fragmented, weak, and heavily regulated by market makers operating through its on-demand funding network. Additionally, it has been negotiating contracts with central banks, foreign banks, and other financial institutions. Instead of making educated assumptions, these organizations are able to transmit money to other nations in a JEFI, which is a normal location where money is put because they have XRP. In other words, why doesn't XRP pump more? What you would have assumed is immediately contradicted by the response. Value doesn't alter, even as smart money stealthily absorbs what's left. Most investors are unable to learn about this stage of the gathering because it is hidden by over the counter trades and private liquidity arrangements. There won't be any more XRP accessible for the average trader to buy once the mathematical certainty grounded on reality and the workings of international banking. This is a mathematical certainty rather than a maybe. The conclusion becomes clear when looking at the numbers. In the near future, there will be a shortage. Think about what would happen if a few of the biggest banks globally, for instance, five significant to ensure they would have enough money for their international transactions and settlements. Global payment processors made the decision to invest a few $1 billion in XRP. The effect would occur immediately and would be quite potent. It is possible that the market won't have enough time to react if all liquid XRP suddenly disappears, which might happen very instantly in circumstances when demand is great. Due to the fierce competition among buyers for the limited supply, the market can only preserve equilibrium by setting prices quickly and exponentially. However, we are not referring to a slow and steady evolution. Even experienced traders might be caught off guard by the abrupt and substantial price fluctuation that would occur in such a scenario. In just a few days, the price of XRP may rise from less than 100 to 250. It would completely change the way digital assets operate if it keeps increasing at this rate, setting a new standard for value in the cryptocurrency market. Let's examine the math once more. Think about the following situation. There are currently 3 million XRP in use. At 750 million has been donated to XRP by a major organization like a payment giant or a national wealth fund. This alone would suggest that after the market is cleared, each coin would be worth 250. It was only bought by one person. By the way, the feedback process cannot be stopped once multiple players have participated. When the next bidder must make a greater bid than the prior one, there is a runaway supply squeeze, one that is worldwide and takes the form of money, something like a short squeeze. This rather low key escalation is due to Ripple's steady development. The need for XRP in the business sector is increasing with every new relationship that is made, whether it be with banks in the Middle East, central banks in Asia, or money transfer companies in Latin America. Every ODL route requires the availability of cash. But every time a new path opens, the pool loses even more tokens than it did before. This storm is magnificent. A source that is running low on supply collides with growing institutional demand. Indicators of this have already been observed. In 2017, the value of XRP rose by almost 70,000% in a single year due to speculation by regular individuals. At that time, there wasn't much money available, the technology was primitive, and the use case was uncertain. The infrastructure is currently spread out across the globe. The relationships are sincere, and the money is going away based on what has to be done, not on hype. We'll go on to the next phase. XRP is the sole blockchain technology that was created to make it easier and faster to settle big transactions. There's nothing ordinary about this blockchain. Both payment networks and central banks are aware of this, which is why they are secretly preparing several months before consumers will become aware of it. Every single time there was a major change in the economy, the same thing happened. While the general public waits and insiders continue to buy, overnight prices suddenly change for everything. How would it feel to react to the announcement that XRP has been set as the norm for international money transfers by a group of central banks? Those who have been monitoring the supply data will realize that it was not a surprise, although the media will report that it was. The existence of a shortfall has previously been demonstrated. There will be a buying frenzy unlike any other in cryptocurrency history if consumers learn that there are only a few million XRP left to purchase on the open market. Time is the last and most important point that we have now reached. This is your last real chance to build a noteworthy site before the window of opportunity closes.